Good morning. We will pay attention to the outflow of money as a result of dividends paid. In the balance sheet, they show us the total ordinary share capital in 2014 increased to 2015. So that tells us immediately that additional shares were sold during the current year. If we look at the shareholders, they show us that for the previous year, we owed 35,200 that we definitely had to pay in the current year. That would cause an outflow of money. They don't give us the information of how much we owe to the shareholders at the end of the year. So I will have to do that calculation. They tell me that the shares that were sold in previous years, so the shares up to the end of 2014, were sold at 12 Rand each. The 75,000 shares that were sold in the current year is now included in this closing balance. Then an interim dividend was declared. It's very important to look at the dates to determine whether the new shares were sold before or after the interim dividend. If the new shares were sold before the interim dividend was declared, they will be entitled to dividend. If the new shares are sold after the dividend was declared, the new shareholders will not be entitled to dividend. So these two dates are very, very important. The additional shares were issued on 1 January. The interim dividend was declared on 28 December. So the dividend was declared before the new shares were sold. So for the interim dividend, only the people who bought shares up to the end of the previous year will be entitled to a dividend. Then at the end of the year, they recommended a final dividend of 35 cents per share. That 35 cents will be paid to everybody. So the old shareholders plus the new shareholders will be entitled to that dividend. If we look at our ordinary share dividend account, we see that we owed 35,200 at the end of the previous year. So that 35,200 will be the opening balance in my shareholders for dividends account. Then I have to calculate what is the interim dividend. Now remember, we said only the old shareholders is entitled to the interim dividend because the new shares were sold after the interim dividend was declared. The old shares was sold at 12 Rand each. So it means if I take that 12 Rand into account and I look at the total capital that was obtained up to the end of the previous year, 1,920 million, and I divide it by the 12 Rand, I can determine how many shares were sold in previous years. If I know how many shares were sold in the previous years, I can multiply that with the 27 cents and I can determine what was the interim dividend. So if we look at the calculation, the number of shares issued in previous years was 1,920 million divided by 12 Rand per share. So it means in previous years we sold 160,000 shares. The number of shares that we issued in the current year is the 160,000 plus the extra 75,000 that we sold during the current year. So my closing balance for shares that will be entitled on the final dividend is 235 shares. So if we just pay attention to it, the number in previous years will be entitled to an interim dividend. The shares that were sold during the current year plus the shares in the previous years will be entitled to the final dividend. Okay, the interim dividend is 27 cents per share. We calculated there that we sold 160,000. So if I multiply 160,000 with the 27 cents, I see that the interim dividend is 43,200 Rand. So I will go and show in my shareholders for dividends account that I owe the money to the shareholders, so the shareholders will be credited with 43,200. The expense, ordinary share dividends, will be debited. Then at the end of the year, we will look at the number of shares that we've got at the end of the year. So it's the shares of the previous year plus the shares that were sold in the current year. The dividend declared was 35 cents per share. And if I multiply that, it gives me 82,250. So I will debit ordinary share dividends, the expense account. Who do we owe the money to? To the shareholders. And I will credit my shareholders account with the 82,250. Now this closing balance, because the dividends was only declared at the end of the year and it was not paid, it means that the closing balance in the shareholders will be equal to that final dividend that was declared. So sometimes they don't tell you what is the final dividend declared. They just say that there is an amount declared, but they give you the 82,250. Then you can assume that that 82,250 that's outstanding at the end of the year will be for this final dividend. Those two amounts should be the same because the balance that you owed at the beginning of the year, you had to pay to the shareholders at the beginning of the year. The interim dividend is always paid immediately. So that was also already paid. So if we work out by balancing, we will see that the bank amount is 78,400. If I add these two together, I also see it's 78,400. So the outflow of money to pay for dividends was 78,400. So what did we learn today? You must determine the amount for dividends, the opening balance and the closing balance, and you must take both of them into account in your shareholders for dividends account. Before you can calculate the dividends, you must determine how many shares were issued at the date that the interim dividend is declared, so that you can determine how many shares will be entitled to the dividend. Then the number of shares will be multiplied with the interim dividend, and that is the amount that was declared, and the interim dividend account will be debited, shareholders will be credited, and immediately a payment will be made. Bank will be credited, shareholders will be debited. At the end of the year, again, when the final dividend is declared, you have to determine how many shares were issued up to the end of the financial year. And then those shareholders will be entitled to a dividend. So the number of shares will be multiplied with the final dividend to determine what is the amount that is outstanding at the end of the year.